So coming into the market today, I said we have Asia high above. We do have some resting buy side liquidity. Asia low. We have New York PM low, New York AM low, Friday low, Asia low. We have some low resistance liquidity, but because we had such a bullish reaction off of London low right here, I said I'm leaning a bit more bullish. This was an extremely bullish reaction off of London low. Okay, only because when 9:30 opened, it manipulated lower. It took out London low and we actually did put in this SMT with a London low, and we end up getting a 5-minute break of structure. All right. So once we got this 5-minute break of structure and this inversion fair value gap, I said, okay, at this point, we're probably going to go higher. Okay. I did not want to take the inversion because we closed above our break even point. And as you can see, if I would have put my stops beneath the inversion, I would have got stopped out. Why? Well, these series of down close candles, these 5-minute candles, are an order block. What does price do? Come back down into equilibrium. It comes down to the discount area of this order block. Okay, respects the consequent encroachment and does not close bodies beneath it. And I had a whole entire lesson about order blocks. If you don't believe me, go look on my YouTube. I will link it in this, and you guys can see for yourselves there was an order block. All right, so once that occurred, there was a few things that were happening. One, we had this 1-minute inversion to the downside. Okay, 1-minute inversion to the downside right here. Boom, we get an inversion to the downside. I say, don't take this, because if you take this, it's going to fail. Okay, why? Because right here, we came literally 4 points away from Asia high. At this point, I'm still bullish. There's no reason why we should just leave Asia high with equal highs just like that. Okay, that's way too close for comfort. All right, so we get this 1 minute. We end up getting a 2-minute as well, where we close beneath this 2-minute right here, this 2-minute fair value gap. We get this close. So there's two people who are putting their stops right there. All right. And then 3-minute complete pattern traders. 3-minute, there was a 3-minute right here. And at this point, how close we closed to this body without taking out this Asia high. And we were targeting what? A low that took out London low with an SMT. This is extremely protected at this moment until we at least take out some sort of significant draw on liquidity, which would be Asia high. So at this point, I'm like, okay, this is going to fail. Why? Because there's a 5-minute order block that we're tapping into. We've already swept out London low. We have an SMT at the low. We left equal highs with Asia high. We do have draws higher, yada, yada. So I'm just going to go for a 1-to-1 scalp if we get any inversions back up to the upside. What do we have right here? Well, we have a 1-minute fair value gap. So all I'm doing is waiting. I'm waiting until this gets close through. Once this gets close through, or that's when I'm entering my trade. What happens on the next candle? Boom, we get our entry, okay? I put my stops at this before the inversion. Why? Because we should respect the discount area of this price action. So if we do come back down, we should bounce away from consequent encroachment. So my stop should be at least safe beneath this candle. This is giving myself a little bit of wiggle room. So I'm going for a 1-to-1 trade. That's all. I'm not going for anything big. It's a no news Monday. I don't expect a lot of crazy price action. So boom, we get the trade, we enter. Then we get an immediate pump after putting in this order block. Once we put this order block in, I cut my risk to here. Boom. I cut my risk from 76 points to 14 points, and I'm targeting 76 points. So I literally moved my stops to basically like $30 worth of risk from $150 worth of risk. All right. At this point, I'm waiting. I'm waiting until Asia high gets taken out. Once Asia high gets taken out on this next candle, boom, we also put in another order block. So what do? I trail behind here, which is my break even, which worked out perfectly. All right. So my stops were beneath this order block, this down close candle. I could have trailed beneath this, but I just moved my stops to break even, and I just held until a 1-to-1. Once we had a 1-to-1, boom, I started trailing a little bit more aggressively, and then I trailed to the 1-to-1, which was right here. I moved my stops to here, and I let the trade play out. Unfortunately, on the next candle, I got stopped out at a 1-to-1, but I locked in my profits. You know, we don't need 7R, 10R, 12R moves. We can get by, look, now price is chopping. Literally, price is chopping right now because now it has no decision on where price wants to go. Imagine sitting through this, getting stopped out at break even because you wanted to hold for some higher high. None of that matters. The fact of the matter is we got in on our trade. We got a 1-to-1 scalp on a no news Monday. We were half risk. We cut risk as soon as we could, et cetera, et cetera. Like, this is how trading works. This is how trading works. All right. With that being said, my day is over. It is 10 o'clock in the morning. I'm going to be recording a few videos today. Today, I'm going to be filming session liquidity, internal range liquidity, and then we're going to be getting into red folder news, which will be followed up with data wicks after that. If you haven't checked out the boot camp yet, it is live on YouTube. We're on day 9. Or we're on, I think day 8 came out today. Tomorrow will be day 9, and I'm going to be filming 10, 11, and 12 today, and I will be dropping them throughout the week. So with that being said, hope you guys enjoyed this video. I'm going to go enjoy the rest of my day. I appreciate you guys. I'm out of here. Peace.